welcome everyone. Good afternoon, ladies and gentlemen. Uh, Welcome to our first fireside chat. I'm sure most of you, if not all of you, are wondering why are we doing such an event with such a short notice, no? And I'm sure you could guess the answer to that question based on our title, right? Uh, the objective of today's webinar is just to give you guys an idea, or at least our view, okay, our view on what we think would happen to the market in the near future. No, this is a short notice for everybody, so I'm super excited to see like 200 plus participants, and of course also I'd like to thank our speakers for today for being available with such a short notice. Right? So, all right. So for today, of course, we're gonna talk about the outlook of the market, and just as a disclaimer, guys, this is just a view, personal view of our speakers, right? And as we all know, the markets are dynamic, and so anything can really happen, right? Tomorrow or next week, nobody truly knows what would happen in the market. But hopefully, with the total experience of the three speakers that we have today, hopefully we could help you. We could help guide you make the best trading or investment decision for your own portfolio. All right. So with that, let's go straight to our no, to our discussion. So as to not waste time, of course, before we go there, let me just quickly introduce our speakers for today. I'm sure you guys already know all of them, but nevertheless, okay. So first one, we have April Tan. She's obviously our chief equity strategist, right? Hi, April. And next
Hello,
one, we
Charles.
have Sir Juanis Barredo. He's our chief technical analyst for COL Financial.
Hello, everyone.
And then last, but obviously not the least, we have our chairman with over 40 years, 50 years now, boss, with over 40 years of experience, boss
50
Edward.
years, 50 years.
50 years na, sorry, boss Edward Lee. So hi, boss.
Hi.
All right. Okay. So okay. I just like to remind everybody, so the idea is just to be as casual as possible and to accommodate most of your questions that you might be having with regard to the market today. So I do encourage you to type in your questions in the Q&A box, and we'll go through the questions and try to answer as much as we can. All right. So feel free to type your questions at any time. Okay. So with that, so let's start off. Okay. So I'll just start off with the first couple of questions just to set the table. So yeah, market today fell by what? 3.8%. I think intraday it fell at as much as 4.8%, if I'm not mistaken. So yeah, what is happening in the market today? So April, could you share what's happening in the market today?
Yeah, so anyway, I'd like to share I mean what triggered the market to be to do what it has been doing, because I think we kind of all know that we initially were recommending people to buy the dip, no, because we were thinking that people were anticipating the 75 basis point rate hike, and because of that, if that happens, then the market would rally because it's already priced in. The market fell in anticipation of that anyway. So I think the surprise was, when the Fed came out with a 75 basis point rate hike, they also talked about raising rates to as high as 4.6%. That's based on the dot plots. And after they raise it to that level, I think the consensus expectation was, when they see the signs of inflation peaking in 2023, they would cut rates. But instead, based on the guidance that they were giving, even if they raise it to 4.6%, or 4.75%, they would keep it at that rate for the whole of 2023. And clearly, I think the market felt that that is absurd. If you keep rates that way, then the U.S. economy would tank. We'd have a hard landing. The economy can't take it. So if you're gonna do that, in other words, Fed, if you're gonna do that, even though the economy is showing signs of slowing down, and just because you want to be sure that inflation is not a problem anymore, even though there are already signs right now that it's being addressed, then the economy can't take it, which is why everything's um, all asset classes are dying right now. So that's a short summary of what has happened.
Yeah. So is it correct? So the market concern is really about the hard landing or the possible recession in the global economy. Is that correct, April?
Yeah, the possible impact of a Fed that has a wrong policy response of being too aggressive.
Yeah. All right. All right. Um, Boss Edward. Okay, so banking on your 50 years of experience. No? So and we've seen the PSEi drop by maybe like 10% the past week or so. So how does this sell off? How does this round compare to previous sell-offs in the history? How does this compare?
If I if I look at we have always talk about market-driven crash. No? We have always talked about that. Even I've done a lot of presentation about that, and you can check on the investment summit or even trading summit. We talk about the different market crashes. So if I look at the U.S. market today, it's called a policy-driven crash, which is the interest rates, the rise of the interest rates, normalizing the Fed basically catching up with the 10-year U.S. Treasury. And then because of that, because the Fed is behind the curve, so what they're doing right now is basically indirectly normalizing it. They're just playing catch up already. So the sad part is because of the additional the war in Ukraine, the China zero COVID, so did a lot of disruption, and because of that, it increased these high interest rates. It's a super high. I mean, it's right now average about 8%. But in normal situation wherein there is no, assuming there is no systemic risk, it's very different. Like let's say in the Asian crisis, there's a systemic risk for the Philippine banks. In 2008, 2009, there's also a systemic risk. Then you can see 50-60% drop now. So in any systemic risk, meaning there's a financial issue, financial problem, you would see those markets driven crash that about 50-60%. But today, if it's a policy, just a policy to control inflation, normally, it should be 25 to 30% now, right? If there is no systemic risk. But today, most of the banks, I think most of the US banks, because of what happened in 2000 and 2009, are very strong, right? The balance sheet is strong. Now, so if that is the case, so I hope I'm right that it stays at 25-30%. Now the problem is Europe. That's the wild card today, Europe, right? And there are a lot of the banks in Europe that can have a systemic risk, right? Because there's really a very challenging situation out in Europe. So that's why the move the last few days was really the strength of the US dollar, right? It's just parabolic, right? Something's happening, we don't know. Now, if there is no systemic risk in Europe, any of the big banks in Europe, then 25-30% is the norm. Now, if there is any systemic, which we don't know, because the rise of the US dollar is parabolic. When there's parabolic, that means the market is worried. Somebody is out there, big institution probably are short the US dollar, and it can create a huge problem later on for some institutions who, for example, are short the dollar. Diba? Parang may short squeeze ang tinatawag natin, may short squeeze. So, but as far as the US, for me, as far as the US concerned, the banks are okay. The US dollar, walang problema yung mga US banks. So as long as there is no problem in the US banks, I think 25-30%. Parang it should be the norm, right?
So
Now,
parang malapit na tayo, boss. So if it's 25%, we're almost there, right, for the US.
that's right. But of course, like I said, today Europe is another story, di ba? May problema talaga yung Europe, right? It's very challenging for the European economy. At this kind of high interest rates, when they're suffering, there really is going to be a lot of deep recession. It's really very challenging for the European nations. Yeah, that's why you can see the pound going, weakening 4 or 5% in the last few days, right? So these are the major challenges that we have. Philippines, no problem. I think all our banks are very healthy. We're just seeing 30-40 billion in profit, right? Because we have learned from the Asian crisis. So most of our banks are strong. So there's no systemic risk in the Philippines. The problem is as interest rates goes up outside, we have a problem because if we don't pace it, that means our peso can continue depreciating. Diba? Yun yung mga major challenges natin. So let's hope that, because we don't know where there's going to be a blowout somewhere in Europe, probably there's some institution that might get into trouble. But I mean, we're just saying that if we are seeing a parabolic move, right, in an asset class, which is the US dollar, somewhere, somehow, some institutions are going to be very challenged. No? Diba? Kasi parang short squeeze talaga yan.
Yeah.
So that's
the
really the
potential
US dollar.
impact. The potential
Yes.
impact of the strong US dollar.
Yes.
All right.
Yes.
Okay.
Yeah.
Thank you, boss. Thank you.
Can I add lang?
Go ahead.
Yeah, just speaking of the banks, no. I mean, just want to add lang about the banks na, during the global financial crisis, if you remember, one of the reasons why we did better than the US was because we were less sophisticated. We didn't have all those sophisticated products. Therefore, when those exotic products, diba, they bust, okay then hindi tayo tinamaan, although of course contagion, we were affected. This time around, I think one of the reasons why we are better off than in the US, because although interest rates in the Philippines have gone down like they have in the US. For example, the BSP cut the rates from 4% to 2%, whereas the US from 2 to 0.25. No, that said, our banks did not lend anyway during the pandemic. We did not have the euphoria of the tech stocks. No, so siguro merong mga konting Bitcoin, but the transmission mechanism isn't the same. Unlike in the US, when they cut rates, of course, everybody started borrowing money. Everybody was at home. Wow, like I want to buy a new house since the borrowing rate is like 2%, 1%. So I go out and buy houses. So it was so inflationary. So tayo naman, we did not experience that. So that said, we are in a better position because we didn't borrow as much. So I think that's one of the parallels that I see with 08 and today, and why we are better off. But I mean, of course, we will be affected by the higher rates and the weak peso, strong dollar. But I don't think we are in the same boat as the US or Europe.
Yeah. All right. Thank you, April. Okay, now let's go to the charts. Okay, so Sir Juanis, what are the charts telling us, globally in the Philippines? What are the charts telling us, Sir Juanis?
Well, we've been monitoring a lot of the trends recently, and they've just continued to fester downwards. During the time that the Fed came out with a more hawkish stand, I think things started to get a bit more accelerating. And this is the reason why we've been seeing a lot more intensification in some of the trend factors that we've managed to see. But if I may, guys, do you mind if I borrow the screen for a second so I can show some charts that way I can put some visual into what Edward and April was talking about? Is it okay? Okay, so I think you guys can see my slide now.
Yes, we can see it.
Okay, all right, good. So let's just start off, and as Edward was pointing out earlier, a lot of the uh, pressure we're seeing is really coming out because the US dollar has been so strong, right? Because as they increase interest rates, of course, the attractiveness of the dollar comes in. But normally you don't see a very accelerated move like the way you're seeing here. So this is the concern that he raised earlier on. So much so that if you look here on the right side, it's affecting, of course, the peso dollar rate as well, which has also managed to be able to push off. And looking at some estimates, it could go between about maybe 59, closer to 59, 59.60. And so these are, of course, situations that markets have to be able to digest over and over. Then in terms of the bond yields, which is a precursor for interest rates, again, moving back up into a recent new high for the US, in the Philippines, testing the previous high, if not maybe potentially breaking this also, but right now still on a very aggressive trend. And that's the reason why, of course, markets like the US and the Philippines have been affected. The picture you see here, for example, is the S&P 500. Last night, you saw it test back the recent low that it's been generating, if not slightly lower. But despite the little rallies you've been seeing, the downtrend remains. And now we're all the way back down to the previous low. And tonight, I think it'll be another crucial night to see if that support holds, or does it crack and do a similar kind of movement like what we saw here. Because if it does, and it does do a emotional swing, it's quite possible that your S&P can still go down maybe to about 3,450, if some level like that. I mean, that'd be somewhere down here compared to where it is. And I'm sure markets will clearly not just take that standing sideways, and that's the reason why you're seeing some pressure off that particular situation. Now, when I looked at the whole Elliott wave process, roughly the trending conditions, normally when a bear market comes in, there are 5 swings on the way down. And if you could just bear with the count that I have, a swing 1, 2, 3, 4, 5. So you're in a 5th wave, but normally 5th wave tend for them to break this previous low. And as an estimate, we could have lows maybe coming towards those 2 areas of support that I've driven down here. So I guess this is what the markets are attempting to try to factor in, and it's why we're seeing such slipperiness of our market. And I can't tell you which bear market more likely it will copy, but I have a very bad bear market here in the US that happened during the dot-com bust. And I think the more important situation here is whenever, for example, we get a technical reading called a death cross, which is when the 50-day moving averages go below the 200-day, the tendency for it is to go into a downtrend and stay into that downtrend until you have one day that you see a recovery. And today, we're in this situation now in the S&P. We've not seen a crossover, what we call a golden cross just yet. And so that means the downtrend should, by all means and purposes, just continue until it attempts to blow itself out. And that's what we're actually waiting for right now. We're waiting for markets to exhaust the selling. And that includes the Philippine market. Today, we saw this. So we have the index going down by about 3.8, and Charles did say intraday, we were down over 4%. Momentum is still very much on the strong side pointing downwards, but we are now oversold. And so now what the market's doing is it's being driven by a little bit of panic. And that emotion is what's generating a lot of this slipperiness. At this stage of the market, it becomes more emotional than logical. And what I mean by that is when people are hurting, they're seeing their positions erode. They're not thinking about cheapness of a market. They're not thinking about what's happening. They're just thinking about, how do I protect myself? How do I get myself out of this situation to try to control these feelings that I'm going through? And clearly, as things become more emotional, this is where the acceleration comes up. But one thing I'd like to obviously tell you is that when this acceleration comes and emotions are running high, this is normally coming towards the lows of a market, or in very ecstatic market is normally on the high sides of the market. So when we're seeing these things, which we call capitulation, which is an emotional driven sell-off, we're coming closer to the tail end of an interim base. Now, I'll borrow the word interim because that means temporary, momentary. We don't know for sure if that will be the absolute base, but at least an interim base before a major rally can come in. And that's something that we're actually looking for, because even the Philippine market is also going through a 5th wave on an Elliott swing. And I'm thinking if we don't hold our previous low, which is this blue dotted line scenario you see here, then we can extend a little bit lower, and that could bring in this kind of maneuvering for a while. And by some quick estimates, that could bring the market down in a capitulating sell-off, maybe something closer to 5,730, hopefully not lower. And then eventually generate a recovery, and then you'll see a wider recovery that will come out. But the recovery will just come back to where your downtrend line is. So the rally that you will see from here should be taken as an opportunity to sell first. Because like Edward said, there's still a lot of headwinds. There's still a lot of things that have to be fixed. Europe is still undergoing certain difficulties. We still have a problem in Ukraine that's not been fixed. China is still going through a lot of things. And so we have to be prepared until these headwinds eventually start to be dealt with and fixed. Then perhaps markets will attempt to try to more clearly solidify their base. So that's what we're trying to wait for now. Okay, go ahead, Charles.
All right. Thank you for that one. Actually, medyo natamaan ako dun sa emotional versus logical, because I am sure everybody who's investing now can really feel the fear, no? So yeah, very, very interesting. Thank you, Sir Juanis. Okay, so actually I do have a lot of follow-up questions, but let's give chance to our audience first. Do we have questions that we can pull up? Okay, so our first question, from John B. How would you differentiate peso cost averaging from catching falling knives if we are going to buy the dip? I guess the question is, how do we choose which strategies do we do? And so who would like to April, do you want to start off with this question?
Oo, pinapatamaan nyo yata. Hindi kasi, okay.
I can take that if you want, April.
I can start.
Okay.
But kasi, okay, when you, at this point, the reason why naman we are recommending peso cost averaging already is because we feel that valuations are already very cheap, no? So yeah, it may seem like a falling knife, but over time, if you buy good companies at a reasonable price, then it's not a falling knife. It's an opportunity actually to buy good stocks at a cheap valuation. So that said, okay, how do you control or manage your risk? I think it's more like, just don't mindlessly buy any stock that is cheap. Make sure that, let's just say when stores go on sale, okay, kung lahat din naman ng tindahan nagsisale, even including Hermes, which never goes on sale, or LV, and they're selling at the same price as, say, a locally produced bag, why would you buy a locally produced bag versus a luxury bag that is selling at the same price? So yun. So ngayon na pwede na kayong pumili at marami na mga blue chips that are trading at a very cheap valuation. I think yun, just stick to that, do peso cost averaging. Fundamentally, I don't know where the bottom is, but I'm quite confident at the current levels, and if you have the patience or if you have the tolerance to hold on for a long period of time, then you will come out ahead. Yun na nga, emphasis on the long period of time. So manage risk by just making sure that you just buy enough and not too much, and something that you can keep for a long period of time.
Yeah. Okay, so I definitely agree. No, so this is an opportunity for us to buy the tier 1 stocks, diba? That seldom go on sale, diba? Like your Hermes nga that you're mentioning, that I couldn't relate to, of course. Okay, Sir Juanis, what's your take on this one?
Yeah, I think April pretty much covered it, but I don't know, maybe April, would it be easier for them to be able to hang on to something if you can give an example? Like, for example, if you're seeing the price of SM drop, let's say in these last few days, Jollibee and Monde, is there a difference with any of the three? Just so they can put context into your
among
answer.
the three of them, Jollibee, yeah, Jollibee, and I would like Jollibee and SM more in the sense that um well, nag-rebound na yung earnings ng Jollibee and SM. And for Monday, the problem is okay. They have an exposure to the UK, and of course you know what's happening to the UK right now. So that's not very good. But between the three of them, okay, SM and Jollibee already showed a turnaround in the first half. Both surprised positively. And you think about it, historically in the Philippines, consumer companies have always been resilient, regardless of economic conditions. So between the three, I would buy SM and Jollibee more. Monde, parang, well, may mga missteps lang sila. So maybe there is time to transition to Monde in the future. But for now, let's go to SM and Jollibee first. And Monde also, of course, one of the other problems is they also locked in um, raw materials at an elevated price. So yung pa yung isang problem. I mean, if you want a consumer staple, let's just go to URC rather than Monde for
Yeah.
now.
So fundamentals are still important.
Yeah.
Unfortunately, they still have to study. Okay, Boss Edward,
Charles?
usually, yeah, go ahead, boss. I was
Okay, just for the previous question about why do we do encourage dollar peso cost average versus capitulation. Capitulation is what called a falling knife. No? I've discussed that long time ago. No? But let me just share with you. When the market, you think that the market is rational, right? Let's say like today it's like down 5-6%. But if you look at what Juanis was showing you, it's just retesting the previous low of June, July, right? So if I look at it, it's still rational. That means the reason why people are basically scared is because the rally went up 20-30% and it just came back down to what it is. So the buying of the dip, when it's rational, it's still considered rational. And irrational is when you're seeing 50-60% drop in the index itself. Like for example, what happened in the 2020 pandemic crash. That is a falling knife, right? That is a falling knife because it's an event-driven, the pandemic scare, right? So it is irrational now. When it goes irrational, that's a falling knife in itself. But when you're seeing those kind of falling knife, huge volume at the bottom, you should be participating. But in today's environment, the last maybe 2 years, it's a cost averaging. You just have to, it's rational, meaning the market has rallied. After the irrational selling, it rallied all the way to resistance. And then what we do is we just encourage, like what April has been saying, you want to buy these good companies because it's cheap. Mura talaga yung market. It's just that because of the rise of the interest rates, globally, it creates these valuations that are very reasonable right now. So, but you need to do cost averaging in today's environment. Kasi rational tayo. Hindi naman irrational.
Yeah. I guess siguro if as a follow-up, boss, diba, you usually mention like when we differentiate, active investors and versus active traders. How does that play a role in choosing what to do today?
When there is an irrational selling, you have to wear, that's why when I was I show this so many times. In a normal environment, if you trade what you see, when everything is expensive, right? When everything is capitulating, yung parang nangyari sa what happened in the 2020, you have to trade what you see, meaning when you know that there's a huge discount, that people are selling irrationally, right, between what is reality and what is perception, right? So when you're seeing those huge disparity, then buying indirectly is like buying a falling knife, right? You understand? So I have to wear my active investing hat. And when I buy that, walang cut loss na yan. I will hold it na, right? Because after the capitulation, it's called a mean reversion. Because after all the selling is finished, there's an artificial supply that's coming out. It's creating all this panic. Once that selling is finished, then there's no more seller anymore, right? I mean, that's what we always we have to wear the hat of that active investing. Kailangan buying good. Basta kailangan companies that are strong, big companies, blue chips companies that are being sold out irrationally. That's why you want to do this falling. That's what we call it, the fall, the drop of a falling knife. Active trading is very different. Active trading is all about understanding. It's a rule-based kind of systematic trading. So normally, if you're a serious active trader, you're not, and you treat it as a business, it's based on rules. Hindi ka tatamaan kasi pag breakdown, cut loss ka na, di ba? So that's why it's but active trading is a very different animal. It's a very different game. Yeah, you have to learn all the rules of the game. Yeah. Right. Yeah. But for an active investor, for example, like say because we teach passive investing, continue cost averaging, buying good companies at a reasonable price, and then over time, babalik naman yan kasi hindi man fundamentally, wala namang problema yan Yes. It's just because of the sentiment that are changing because of rise of interest rates. Pag rise of interest rate, all the valuations goes down anyway.
Yes.
So it has to be cost averaging. It has to be cost averaging.
All right. Thank you, boss. Let's go to the next question. Okay, from Jamil. What high dividend yielding stocks are good to invest in right now? April?
Okay. So, initially, I was telling people to buy REITs. The problem is, of course, recently we know may lumabas na news about Pogos being asked to leave the country. And in fact, just today, there was some news that I think I don't know how many Pogos are going to be asked to leave the country along with the deportation of 40,000 employees. And of course, there is this other thing na the BPOs will be allowed to do work from home if they transfer from PESA to BOI. So that said, may konting risk tayo sa mga offices, and we know that most of our REITs are offices. So that said, maybe you would like to consider to buy, if you want to buy REITs, maybe consider buying CREIT, which is more of a solar power related REIT, no? So I just did an update a while ago. The dividend yield for 2023 is around 8.4%, no? Which is already very attractive. For other stocks, okay, I'm wearing also the hat of capital appreciation, no? Kasi if you just focus on the dividend yield, the problem is right now, ang taas ng interest rate sa bonds. So it might be more attractive for people who are just focused on the yields to just buy bonds, because the 10-year bond, for example, yields a 7%, and maybe corporate bonds of blue chips would provide something similar, or with a shorter tenor of maybe 5 years, no? But if I want to buy a stock that I think will be a little bit more defensive, that is cheap with pwede na dividends, then I probably recommend Aboitiz Power or Meralco. Yun, regardless of what happens to the economy, they'll be okay. And given the tight power supply, baka may benefit pa for them. So yeah, I think those are two other stocks with high dividend yields na pwede na.
All right. Thank you, April. Okay, let's go to the next question. Do you have the next one ready? Can we go to the next question? Okay, nawala. Okay, so next question from Laurel. Why are bonds down too? Who wants that?
Yeah, I can answer that. Yeah.
Okay.
Kasi as interest rates go up, bond prices go down. Yun lang yun. Kasi for example, may bond ka, kunyari, a bond that is priced at 100 pesos, tapos ang coupon niya, 3 pesos. If interest rates are 7%, of course, paano na yon? 3 pesos lang yung yield niya. So maybe it has to drop to say a 96 to compensate for the fact that its coupon is only 3 pesos to deliver a 7% yield. So this is how it works, no? In layman's terms, that's what happens. That's why when the interest rates go up, bond prices go down.
Yeah, so parang it seems like talaga in this environment, parang no asset class is spared, no, with the surging interest rates. Of course, driven by the inflation. I mean, almost all asset class are really falling, di ba?
Yeah, and also I think maybe let's put it in the perspective of maybe say corporates, or di ba may tinatawag tayong mga junk bonds, high yields, etc. Of course, if interest rates go up, the riskiness of the borrower goes up as well. Siyempre, baka mag-default sila. Therefore, may added element pa yon. So why are bonds down too? Because of course the credit worthiness of the borrowers are also affected, which is not just because of the high interest rates, but of course that extra premium that you pay because people are worried with what's happening right now, the higher risk of a recession, and of course more expensive funding costs because of what the Fed is doing and other central banks. The risk of default goes up.
Okay, I think that answers that question.
I think Charles,
Yeah, go ahead.
They have to remember, if they are buying the good AAA corporate bonds, they just have to hold it to maturity. I mean, they should not be worried too much about the pricing, because when yields goes up, bond prices goes down, diba? So they might be thinking that they're down, maybe some of them are down 10, 15, 20%, right? In today's term, because of the rise of the interest rates. But in reality, after 3 to 5 years, back to par naman yan, di ba? So it's a temporary probably what we call a challenge, right? But if it's a long term, you buy a 3 to 5 years, walang problema yan. Walang problema yan.
Yeah,
Hold to maturity lang.
As long as the business, the issuer is solid.
Yes.
It's just a valuation issue. The current what's happening right now is just a valuation.
Yes. So yeah, I mean, well, if you attend my seminars and my market outlook, I talked about how I prefer bonds right now. Well, that's kind of weird coming from an equities person. But that is the reality. I mean, during recessions, the first thing that happens is interest rates go down, therefore bond prices go up, etc. But that said, kaya nga, wag kayong ahabol sa pinakamataas na yield na bond. No? Don't just focus on the yield. You also have to focus on the issuer. You better make sure your issuer is AAA or it's a sovereign na kahit paano malakas. I mean, I don't have issues naman about the Philippines or the US economy. If you want dollar denominated, a sovereign bond is fine. Importante rin siya because at this stage of the market, or you have that risk of defaults. So kahit magkamali ka, just hold to maturity and you'll be fine.
All right. Okay, thank you. Next question. Can we go to the next? April. Okay. Given the volatile market conditions, would you recommend buying individual stocks that pay high dividends, or the PSE fund, index fund, or for a regular investor like myself? From Susan.
Well, ganun. Ang habang pose, no? Iniisip ko.
Talagang, impromptu talaga lahat. Live talaga lahat.
Oo.
Yeah.
Ang hirap no? Well, you can buy if you don't have time to pick stocks, maybe an index fund is okay. Especially if you only have a small amount of capital na unti-unting dumating, di ba? So might as well just buy an index fund rather than individual stocks, di ba?
So basically, if you don't wanna, ayaw mo na mag-isip, di ba, just go for the index fund, you get a diversified list. But if you have, just linking it back to the questions a while ago, if you believe like if you have a certain list of companies that you really like fundamentally
yung
that are
mga
solid,
yeah.
'di ba? Pwede rin.
Conviction, oo, pwede
Mm.
rin. Oo, may konti ka pang income na nakukuha, 'di ba?
Yeah.
Pwede rin naman. Yeah, but sometimes 'di ba, the amount of funds we have is a limitation. 'Di
Yes,
ba?
yes.
So mahirap din naman, and we always recommend or advise investors to be diversified. But if you don't have a lot, it's difficult to be diversified, 'di ba?
Yes. All right. Boss Edward, would you like to add anything?
Yeah,
Whether
I
you
think,
prefer index funds or stocks?
well, I think if what Susan is saying is she's actively a regular investor. So that means a cost averaging, that means he probably is just setting aside a small amount of money all the time, right? So like what you were recommending a while ago, you can do the cost averaging on an index, that's fine. The second one is that if you're, let's say, buying the power sector, the Meralco, the Aboitiz or the telcos now that is capitulating, like say PLDT, I think they're paying 3, 4, 5% cash dividend. That can also be very good, diba? Right? Kasi nagkakapitulate naman lahat yan, right? So when everything is capitulating, then what you do is that you just diversified individual issues that are paying 3, 4, 5% cash dividend. That can also be part of that, right? So you diversify on your own now. Parang directly, it's like a PSE index in itself. Now you get the direct cash dividend into your account. Kasi everybody's capitulating naman eh. Kamukha naman lahat eh, di ba? Yeah.
Yes,
So
that's
what
the
you
thing.
do is you just go to investment guide, and then basically look at the dividend yields, high dividend yields, and these are good companies naman eh. I mean, the Philippines, most of the blue chips are very traditional businesses, right? That won't go too far. Right?
All right. Okay. Thank you, boss. Next question. My REIT holdings, CREIT, AREIT, FILRT, MREIT are badly hit. What strategy do you recommend to manage my position? From Francis. April?
Ako na naman.
Ikaw muna.
Bakit?
And then let's ask Sir Juanis later.
I think you should just hold it. Kasi of course, interest rates are going up. Therefore, 'di ba? They like the bonds we talked about earlier, 'di ba? Kailangan bumaba yung presyo to compensate for the higher yielding alternatives, 'di ba? To make it more competitive. Plus of course, meron pa tayong yun na nga yung mga bad news about offices, and these are predominantly office related. Well, of course, except for CREIT, no. So yeah, I mean, if you're after income, they just hold it. It's okay. I think they will bounce back naman eventually. These are all solid companies with strong balance sheets. So eventually, when of course, my presumption is that interest rates will eventually go down. Therefore, that's it. Magre-rebound din naman yung presyo, no? So yun, we just have to wait for interest rates to go down again. Then I think these REIT prices should recover eventually.
All right. Sir Juanis, so if you want to answer this one directly, or if you want to do like a general take, like let's say kung may hawak sila na any issue that are down significantly, what do you recommend, sir?
I think it'll just be a combination of answers that both speakers had given earlier on. Obviously, by I think what Francis is doing, he's taking REIT positions to be able to get the dividend yields at the end of the period. So right now he's taking that. I think April raised the point of what risk that can come in, especially on the property related REITs. And if they want to refocus or lighten on some of that, perhaps okay, because it was not as nice as when I'm sure when things began. Now, with regard to the general, in others, what do you do when you have a stock and it's now plummeting? We'll go back to the same premise. I said, are these companies that are viable companies without any compromising headwind, right? So, for example, if in the property businesses we're having issues with POGOs, you could be having issues with PSEi, right? All these other things that could add some pressure, then obviously these are the ones that have questionable aspects. So you want to be able to just keep yourself situated on the ones that have less headwinds, because when markets rally, you'll probably see more viable continuation rallies from those rather than the ones that have problems. So I think it's a combination of what the two have been putting together earlier on.
All right. All right. Okay. Yeah, okay. Can we go to the next question? Okay, Sir Edward, how do your CTS traders trade in this type of environment? Do you just short everything, or are you looking for bounce opportunities? Or are they staying on the sidelines? From Bobby. So specific to CTS.
Or mostly for CTS traders, we are basically staying on the sidelines. No, because we are basically very rule-based. Very rule-based. So we can have some challenges, but overall, we are basically on the sideline. We're just waiting for markets to quiet down before we can participate again. So you can see that our volume has gone down so much, right? I mean, we're not really doing anything. Because CTS is like what Charles we were discussing, that we just use rule-based, and it's a identified risks that we put in. So in this kind of environment, basically we're still ahead a little bit, or globally, and but of course the whole market has taxed so much, right? So we're just basically in the sideline, not doing too much. Because a rule basis, there's nothing to do. I mean, we cannot do what buying falling lines, all these things. We don't do those things. Everything has to be quiet down. We participate only when it's quiet. We cannot just close our eyes and do what we buying when there's irrational selling. CTS is not allowed to do that. Has to be very, very rule based. It's a rule based. So staying up, we're basically on the sideline, not doing too much.
All right. So if I may lang, no? So I guess at this point, kasi some of the audience might be confused. No? Parang it seems like we're saying different things in a way, di ba? The CTS traders are staying on the sidelines, and on the other hand, we recommend doing EIP as on very good companies. So I guess if I may lang, I guess the critical thing is to really understand or find out what kind of investor or trader you are, diba? Whether you're a long-term investor, an active investor, or a professional trader talaga. Meaning you really wanna make like consistent profits day in, day out. And to be honest, at least in my opinion, there are pros and cons. There are challenges to each of these three. Each of the type of traders or investors that you are. So you have to know who you are, what you're good at, what your profile is as a person, and then act accordingly. So yeah.
Just let me add something. The reason why, as far as whenever I go to an event on financial literacy, we really encourage people to look at things on a much longer perspective, more passive investing. So we always talk about just setting aside a small amount of money, 10, 20% of whatever you make, and basically buy all these good companies that are selling at a discount, right? It's at reasonable price, and reinvest the dividend. That is basically still the winner today. It's still the winner. I mean, yes, stocks can stay irrational for a long, long time. For example, I did a presentation just 2 weeks ago in the World Summit. I showed the Microsoft's chart that it took 10 years, did not go up. Microsoft did not go up, right, after the dot-com crash. But then businesses was growing for the last 10 years. But after 10 years, the market went 900%, no? Right, so people has to understand that when you're investing in the stock market, you have to have the mindset of also investing in the business. You have to look at it from a business point of view, investing in businesses. Because if you invest in the stock market, it doesn't go up. Your expectation, you're frustrated, 10 years na ako nag-invest dito, wala pa akong kinikita. But you have to remember, if you're buying a good company, they're paying you a dividend. In other words, they are basically continuously giving a cash dividend for you to wait for them to grow it. Diba? Then as interest rate starts popping out and it starts going down, the market will go up naman. So the challenge is most people is that they have to, if they want to be more sophisticated, I mean, it's available, right? I mean, we talk about this all the time. So being an active, being the passive investing is really what we really encourage. Because if you don't have time, you just have to spend that time keeping that 10-20%. So save, invest, reinvest lang naman yan, di ba? And they are definitely the sure winner. They are the sure winner. The active investor is only arises when the market, when you have accumulated wealth already, after 10 years, you have you've been investing for 10 years, so that means your portfolio has gone up so much. Then a little of what we call active investing is wherein you need to understand what is risk on, risk off, based on interest rates na, di ba? Right? We look at the 10-year, di ba? We talk about that also in 2019 at 18. We talk about, it's all about interest rates, risk on, risk off based on interest rate. Only when you have accumulated a substantial portfolio, your asset have gone up after 10 years probably or more than that. And you will now see volatility. You have to learn a little bit about all the possibility that market can go down 10, 20, 30, 50%. Diba? So, nag-invest ka na 10 years, tapos nawawala yung kinikita mo, nawawala yung investment mo. So, but these are all available na we try to basically talk about risk on, risk off. Yan. Pag mahal, you have to, diba? Pag market interest rates, you have to what they call the top slice, diba? So that you can still be in the market. But even then, if you are continuously just buying good companies in a cost averaging basis, by the end of the day, wala namang problema eh. Diba? Kasi these are good companies. You have to buy good companies. Now, all these speculative issues, we don't encourage. Diba? All this fundamentally has problems. We really don't encourage it. So they have to understand that. It's basically the winner is still passive investing, and then eventually an active investing based on, risk off lang. No? Top slicing just to make sure that whenever there's a volatility in the market, it goes down. You just buy it back lang. No? So these are strategies that are available. I mean, we have a lot of content. We talk about these things already. Yeah.
All right. Thank you, boss. Thank you for that clarification. So you really have to understand those different rules. All right. Next question. Given the market environment right now, how should we adjust our portfolio ratio between stocks and bonds, from Jordan? So April, you were saying something about bonds a while ago. So how do you want to answer this one?
Hindi ako expert yan eh. Pero I guess okay. Maybe you can be a little bit more heavier invested in bonds versus equities. And then when the bonds rally, maybe then you could shift some money from the bonds to equities. Kasi malamang mauunang mag-rally ang bonds. And then shift to equities. So, but in terms of weight, like, it depends.
Yeah.
That's a tough, that's a tough.
I guess it largely depends kasi also on the investor, no? Depending siguro on the risk appetite,
and even the age,
investment horizon. Yeah, so it's hard to give a general blanket answer to that ratio. But I guess compared to the historical average, maybe you could increase your bond exposure a little bit. Is that what you're saying?
Yeah. Let's say nag-50-50 ka, maybe right now, instead of doing a 50-50, you could do, say, 60% bonds, 60 to 70% bonds, 30% muna ng equities. And then when your bonds rally, then you could, what do you call that?
Rebalance.
Rebalance. Yes.
All right.
Okay. Just to make a comment on this, no? It's always 100 minus your age, diba?
Yes. That's the rule of thumb. That's the
The rule of thumb, yeah.
That's for equities, no? So 100 minus your age is your equity exposure.
Yes, that's right. As you get old, your exposure should be less, right?
Yeah.
So whatever money you have, let's say if you're 60s, then 40% should be in equity, 60% in bonds, diba? Fixed income product. So may ganun talaga, may rule of thumb talaga yan.
All right. Okay. Actually, I just wanna I just wanna go before we go to the next one. Oh, sige, let na show na sige. Kasi I found an interesting question. But okay, let's go to this one first. What will be the worst or lowest support level that you can see for PSEi? So, Sir Juanis from Majesty.
Well, in my slide earlier, I painted first 5730 as the next support. I did not show the next one, but the next one's about 5,350. I would say that would probably be it as a worst case situation. I mean, I'm hoping I don't see it, but that would be the lowest prediction I have for as of right now.
Okay, so let's
Charles,
hope for
can
the
I
best.
ask you?
Of course. Ano? Ako naman,
Also at
you
the
put me on the
5.7, what kind of PE do we have for 2023?
at 5.7, talagang ano so at 5, that would be around 12 times if I'm not mistaken. So at least from if you're gonna ask me from fundamental perspective, kung ako, laban na ako dyan.
When was the last time we saw PE levels at that low?
That was, I think, before maybe 2011. I think, or yeah, I think 2000 or baka 2010 pa. If I'm not mistaken. Kasi I think
the historical average is 17 to 18 times, depending if it's 5 or 10 years, right? So 12 is like really cheap.
Yeah. Oh, okay. To be fair, Sir Juanis pala, to answer your question, briefly during 2020, we did break below. What was the lowest April that we hit for 2020? Pero kasi mabilis lang siya. So personally, I don't count it. Parang as Boss Edward was mentioning a while ago, it's just parang irrational selling for diba? Everybody's so scared with the pandemic. So yeah, but if you strip that off, we go all the way back to 2010, 2011 for that level of PE.
Okay, wait. Let's see.
But I think for 2020 for the March 2020, the capitulation there, I think for
4,000, 4,000 plus.
Yeah, kasi 'di ba?
Yeah.
I think in a span of like a week, 'di ba, the market fell by what 20% or something. So
Nung nag-lockdown.
That was really the capitulation, yeah.
Yeah.
All right.
I think Charles, you have to, all these things, right? And the reason why it's 12 times is because interest rates are at all-time high, right?
Yes.
Diba? The minute that the interest rates peaks and it goes down, the market will rally by itself the money. Right? They have to understand that. Diba? Kasi, diba? Ganun lang naman yan eh. Kasi when interest rates peak and it starts rolling over, the valuations will be upgraded already eh. Diba? Right?
Yeah.
So they should understand that these are opportunities. These are not where you should be scared right now selling at this distress level. Diba? And the reason why it can be 12 times is because interest rates globally are, diba? 10-year are going new highs. And that's the reason why it's scaring all the global fund managers that are liquidating. Diba? As margin calls, I'm sure may mga margin calls din yan globally, right? That's why they continue to just liquidate it. So very different picture dito. Of course, the challenge is, diba? So, kasi 10 years na tayo new market, diba? So the frustration is always there, right? But they have to remember, during those 10 years, business continues to grow naman yan, right? Lumalaki naman yung mga kumpanya, hindi naman lumiliit, diba? Diba? So when you're seeing that means valuations are all-time low talaga yan because of pricing interest rates yan. And then, of course, there's no foreign inflows. But it has been going on like this for the last couple of years. The Philippines has been liquidated for the last 10 years, right? So the all-time low in terms of foreign investment, right? But once global interest rates starts falling, the flows will be coming back naman yan. Will be coming back.
So the cheating talaga would be the US 10-year, diba? We have to.
Yes.
So ako personally, just to share, every day when I wake up, that's the first thing I look at. Diba? The 10-year, umakyat pa ba or did it already reverse? So just one thing that you could always take a look at.
May tanong lang ako kay boss. Can I ask?
Go.
Yes.
Sure.
Yeah, well, I just want to ask for your views on the interest rates, because of course you talked about how interest rate is affecting valuations of stocks. Kaya siya mababa because interest rates are high. But of course, we have the people, some people saying that interest rates are gonna stay higher for longer. So do you agree with that view, or do you feel like medyo over lang tayo ngayon?
The $1,000,000 question. Okay,
Yeah.
boss.
You have to remember. You have to remember that what we are seeing today, is a lot of commodities, which are the leading indicators that created high prices of the inflation numbers that came out, diba? Right? But we're seeing now globally, commodities prices have gone down, right? Including the oil for the last 2 days, right? As interest rates goes up, diba, there's a possible recession. So the Fed really wants to make sure that the numbers will come down. And of course, the last is always the oil prices. Diba? The oil will always be the last, because that's the barometer. And we're seeing oil prices going down already. So what does it mean? What does this all mean? No? The biggest problem is that most, especially in the Philippines, for example, when prices was going up in the second quarter, a lot of them, really, all the manufacturers, basically have to lock in at high prices, right? They're paying 30-40% more in terms of, just to make sure that there is no displacement in terms of, there's some commodity, like say, the wala yung price, the McDonald's was, the large price was wala nang large price. So, yes, so these are the challenges of most of the manufacturer. Their raw material inputs really has been locked in, some of them till end of the year, right? So that's why inflation, even in the US, is the same thing. Because when you're importing raw materials and then you're locking at the high prices, automatically tatamaan ka talaga, di ba? Now, so all these inflation numbers today that are being very challenging is because of wage inflation in the US. And of course, a lot of them are still locking at high prices. Hindi pa nila mabababa yung cost of, di ba? Kasi nakalocking ka. I mean, we always put a 3 to 6 months inventory yan, di ba? So lahat nakaipit. But after they finish all their locking, all their buying, the prices just went down. Nagcapitulate din, di ba? Parang nagcapitulate mean reversion din yan. Ganun lang, nag-euphoria, di ba? Kasi people were basically trying to purchase their raw materials. So parang may artificial demand because of that quick move. So ano nangyayari? Nakaipit nga sila. They cannot really do anything. So that's why inflation is slowly, it peaked, but it's slowly going down. It's just that the Fed basically today, because of wage inflation, so they really want to slow down the economy. Kasi at 8.3, mataas pa yan. But I really believe that it's really coming down. It's really coming down because the commodity prices are showing it's coming down. So I just don't know whether it's this month or next month. But alam mo, pababa na yan. Pababa na talaga yan, di ba? So especially with the oil prices going down. So it's just a matter of time. We're just seeing this elevated, parang short squeeze in the US dollar. Pero pag natapos yung squeeze na yan, parang nangyari early this year, di ba? Yung commodity prices sumakit. Parang yung US dollar, parang ganun din. Parang may short squeeze on the US dollar. Parang they're squeezing some, we don't know these things, but we see prices going up. At least there's a short squeeze. But there's a huge demand in dollars. Somehow, somewhere, somebody is covering their shorts or whatever, right? So that's the only thing that we're concerned about. Pero I think malapit na yan dapat, di ba? Kasi nagsisqueeze na After they finish their buying, dapat it falls by its own weight, di ba? So to answer to that, tingin ko malapit. Tingin ko malapit na talaga yan. Kasi di ba, nag-accelerate na. I think, Juanis, you have to correct me if I'm wrong. When you're seeing acceleration in terms of a certain commodity or a certain asset class, it's a blow-off stage, di ba?
Yeah, you can't turn those trends right away. It takes time to turn them around. So that's why you're seeing that. And like you said, with some companies playing safe by buying in the futures market to lock in their cost. You gotta get that inventory out by the time they make their purchases, maybe by the first quarter or coming towards the first quarter, you'll probably see a much more rapid descent into commodity price. And of course, the inflation levels.
All right, all right. Okay, so I'll go to my ano kasi I saw this question from Moises, no, and I like the question very much, no. So the question goes, in investing, how do you manage risk? Diba? So especially for this time, diba? I'm sure there's lots of uncertainty. The markets are, it's scary, diba? It's scary. You see, if you look at the peso every day reaching new highs, all the risks that are here today, no. So how, like, if I just run through all three of you one at a time, no? So what are your ways to manage the risk at this point? April?
Yeah, so I always tell investors naman that the strategy now is to peso cost average and buy a size that you can keep for a long period of time. Na kasi we don't know when the markets will turn. So the peso cost average is, alam naman natin the trend is down. So if you peso cost average, at least you have a better opportunity to buy at a cheaper price, assuming that prices continue to drop. And then of course the size is, and knowing that this money is something I won't need. So you'll have that durability na, let's say bumaba siya, hindi ka matatakot, you can hold on to it. And of course, be picky when you buy, no? Don't just buy anything and everything. You just buy the strong companies that will be worth a lot someday, because now you have the choice to. Kumbaga, the best assets are all selling at a cheap price.
All right, all right. Sir Juanis, do you wanna add anything?
Sure. I think primarily I would focus on position sizing and position quality. Position sizing is all about how much you can take, because let's say, for example, you're loaded and you're an aggressively positioned person right now and you're dealing with a market that's falling down, especially in a capitulating situation. In your mind you're saying, okay, malapit na yan, as Edward saying. Yeah, I'll just have to hold a little bit longer. But then every day, let's say if you see a 3% drop, 4% drop, 5% drop, can you tolerate that? And if your position is too heavy, you might relinquish control by saying, di ko na kaya ito, and then ibabato nyo on the way down nearing the low, and that's what you don't want to be doing. So I think the right position size is very important, so that you can control your emotional state to make the right logical sense of the decision making. Then of course, position quality. Here it's what Dem of April and Boss Edward was talking about. Are you in the quality issue, or are you in the issue that where there's a lot of headwinds taking place? And if it is, then of course it might take some while before you can recover into that. So I think those two would be very important.
All right, thank you, Juanis. Boss, do you wanna add anything?
I think what we have discussed again and again for the last 20 years I've been teaching financial literacy is really setting a small amount of money, 5 to 10% or even up to 20% depending on your age, and buy good quality companies and reinvest the dividend. Because I tell you that by just doing that, that passive investing and reinvesting will be bigger when you retire, right? When you retire, let's say when you retire, that passive investing that you've been going on for the last 10, 20, 30 years will be more than the retirement that you'll be receiving from the firm. That is, I never say guaranteed, because guaranteed is only debt and taxes. But if you continue to just buy all these good companies, right, 10, 20% of whatever you have, di ba? Tatabi-tabi ka lang, di ba? Get the dividend, reinvest it. I assure you, 10, 20, 30 years from today, the day that you retire, that investment, that passive investing, will be more than your active income combined. Ganun lang, simple lang. Simple lang. It's not going to be it's not too complicated. Let me just share with you the richest man, di ba? With si Jeff Bezos as I always talk about that as Warren Buffett. You know, Warren, you're the second richest man in the world. How come nobody follows your simple investment strategy, buying good companies at a reasonable price and hold it to time, right? He said, because everybody wants to earn money quick. Gusto mo kumita na kaagad. And that's really the challenge of investing in the market, right? So you need to look at businesses long term. You like it, continuous, just take 10, 20% of whatever you want. You don't even need 20, 30, 5, 10% lang. The discipline lang yan eh. And over time, I assure you, that passive investing of yours will outperform. One day that you retire, you'll see that your passive investing is much more. And the number is correct. Look at Warren Buffett. At the age of 50, he was $300 million. At the age of 60, it was $3 billion. At the age of 85, he was $60 billion. Right? So it's just a matter, it's just time in the market. It's just time in the market, buying good companies through time. Then you'll be okay. Diba? Pero the set aside, 5, 10, either you risk whatever you make, 5, 10, 20% max. You just do that, you will be all right. And lower down your expectation. Because most of people, especially the youth, they just want to make money immediately. But they don't understand. It's not easy to be actively trading the market all the time, right? I mean, sometimes there will be challenges, right?
They want the best of both worlds, Edward. They want the maximum amount of reward with the most minimal amount of risk.
That's true. That's true.
Yeah.
That's true.
All right, but yeah, all very good answers, no, and very clear, no. So yeah, so I hope the one who asked, no, Moises could, and even the rest of the audience could apply it, hopefully, no. Okay, so let's go to our next question. Do you have more questions? Yeah. Okay, I'd like to ask the panel, for an aggressive investor, ito na yung sinasabi natin, for an aggressive investor like myself, how would you divide your exposure in the equity markets today between global and local, given the current situation? Oh, yeah, very good question from June R. So, April, do you want to start? Ikaw na naman.
Actually, ang sasabihin ko na lang is my feelings towards Philippines and the US, no, kasi like, where am I more bullish today, Philippines or the US? Because of course the US has been one of the stronger markets. I mean, if the past 10 years, maybe kung nag-invest ka sa US, as of today you're still ahead, whereas maybe in the Philippines you're only up slightly, diba? But today, I'm more bullish on Philippines rather than US, because nga, as I've discussed earlier, the leverage position of Filipino companies is less compared to the US, no? Therefore, we will be less hit. Secondly, the market has been cheap for a very long time, and I'm sure you guys all know. Kaya nga frustrated kayo. Sabi nyo, I've been holding on to my position for a very long time. COL Research has been saying stocks are cheap. So in other words, we're in a more advanced stage as far as the bear market is concerned, because foreign investors have been selling consistently. Naubos na sila. Like, wala na silang halos hawak. The very light liquidity or illiquidity of our market is another evidence that the interest in the market is already very low. So my feeling is we're more advanced also, and the valuations are showing that, as you said, 12 times PE potentially if we reach the 5-7 level. So yun, mas nasa late stage na tayo ng bear market. So my feeling is when the market turns, mas mauuna tayo versus the US. US is still, right now, they're at in terms of PEs, they're at the historical average PE. But of course, a lot of analysts are saying meron pang earnings downgrades, because at this point the forecast is still up earnings year on year, even for 2023. But then the likelihood of a recession right now, I think may broker na naglabas, Morgan Stanley, I think said there's a 98% probability of a recession. I tend to agree with that camp. that the likelihood of a recession and even a hard landing is at the 90% level
that's in the US, was
in
the
the
98%.
US.
Okay, just to
Yeah.
clarify, that's
Yeah,
in the
yeah.
US.
Oo,
Okay.
in the
Right.
US. Tayo kasi, I mean, ano eh, 'di ba sila kasi nag-reopen sila earlier eh. So they were much stronger. Eh tayo this year lang tayo nag-reopen eh. So ano pang ire-recession mo eh ngayon pa lang 'di ba? So yeah, that's why if you ask me, I'm more bullish on Philippines than I am in the US kasi sila parang kasi simula pa lang this year bumaba yung market. Tsaka of course mas may froth.
So par
Tayo wala naman eh, nasaan yung froth, 'di ba?
so
Wala
that's
ngang froth eh.
that's the benefit of having a low base, no?
Yeah,
Parang
we're coming from a
parang
very
medyo malungkot, di ba? The thing that makes us bullish with the Philippines because we're always low base.
yeah,
Okay.
I think about it. You know, a lot of companies in the US, like the tech companies, they were funded by cheap money, eh, 'di ba? The objective was not even to earn anything, just grow, 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 and then we'll do a second, a third funding round because people just had so much money, they wanted to invest in these companies, you know. So wala naman tayong ganyan dito eh, traditional companies tayo, 'di ba?
Wala. Mahirap umutang even from the
Mahirap
banks. Yes.
umutang, yes.
All right. Okay, Sir Juanis, are you seeing anything differently with regard to like the technicals of global and the Philippine market?
Well, perhaps in my view of answering that particular question, I mean, it says they're aggressive, right? So I guess the positioning is also very key. But I'm a firm believer that if what April's saying is true, and I hope it's not a hard landing, but assuming it is, I find it very difficult to believe that a hard landing in the US will not affect us. And so I think that we're probably going to see some downside action, if not in similar stand. Uh, it's something that can keep us also depressed if the other markets, like the Western markets, continue to go down. So I don't know if I'm going to be telling myself to be more heavily weighted in the Philippines, because I guess I'll scratch my head and ask, okay, if I'm an international investor and both markets capitulate, will I jump into the Philippines first before I would jump into the US market? Uh, I don't know. I don't think so. I don't think that's the view that the international move. Now, of course, if I were to be a stock picker and I know more of the local companies and I see more evidence of whatever dividends or prospects that individual companies can present to me, and I can isolate myself by not just buying an index which may have property companies being hurt by a lot of the things we talked about earlier, then maybe on that basis I can start stock picking for the ones that might outperform. But I find it difficult that we could decouple from what's happening in the Western markets. I think we'll probably follow suit.
That's totally fair. No? That's totally. Okay, Sir Juanis, if I may follow-up question lang on my end, kasi we've been mentioning, capitulation today, di ba? And something that we're looking at. So maybe what would you advise like our traders, for the traders, okay? Who want to try to, time the capitulation? What should they be looking for? Or is it something na wag na nila, don't attempt because it's so difficult, nobody knows?
You know what? There's so many years that I've done this and I've seen capitulations come and go. I find myself in the beginning of one saying maybe I shouldn't participate, wait for it to blow off. But believe me, when you see 3, 4, 5, 6 days of this craziness on a selling, and you're seeing prices, something jumps into you and saying this is an opportunity of a lifetime, and you're going to find yourself trying to participate because you're not going to be able to see opportunities like this, so many times. And you might want to do it. But like Edward said, right? If you choose the right company and you know that, even if you buy on a particular stock, maybe in 1 or 2 days or even cost average, you have to also tell yourself that you may not catch the absolute low, because that's not the point in capitulating trading. All right. That's not the way it is. It's so hard to guess that one day where you will get that low. So you have to be prepared to sit with it after you see that immense discount already that you're getting. But the emotional sell-off is there, it's present. So it should be around the corner.
All right. Boss Edward, would you like to anything? Would you like to add anything on the whether local or global or on capitulation?
Kasi when I see the question of June, parang aggressive in a sense of kasi when you talk about aggressive, that means, di ba, pwede ka mag-all in, pwede ka, di ba, all these things, di ba? In our case, basically, if you're in a portfolio, you can just divide it, right? And then could do both, do cost averaging, right? But syempre, like us, like what everyone was saying is that because we are basically here, we understand the huge discount that we're seeing. I mean, like for example, let's just talk about SM. This is the first time SM was deleted in the FTSE. First time. First time that COL also came up with a research for SM. And then first time we also see the insiders, like the chairwoman was buying back their shares at 780, 790, right? I mean, when you're seeing this kind of a company that was deleted, that means when you're deleted from any index rebalancing, you can see that there's an artificial supply. There's additional supply that's coming in because globally everybody's rebalancing, they're liquidating their SM shares. And this is the first time that we're seeing this kind of a, I mean, when did you ever recommended buying SM, April? I mean, diba, this is the only
mahal.
time you're able to,
Laging
diba?
mahal, oh. Same
Ayun
with
lang
Jollibee,
mura.
laging mahal.
Diba? So these are opportunities for us. It's an opportunity to be accumulating. We don't know how far it's going to go, right? How deep it is. Because if I tell you, I mean, I don't know. I mean, things can happen. Nobody knows, right? Anything can happen. Let's say, for example, geopolitically, then Russia becomes, send a nuclear bomb to Ukraine. I mean, these are things that we cannot control. That's why risk is very important. You manage your risk now. About only 10-20% of whatever you have, you allocate it in investing. I mean, we've been talking about that for 20-30 years already, encouraging people to have that kind of a mindset. Right? But if you're aggressive investors, then that means you're taking extra risk. You're taking extra risk. And if you take extra risk, you can get hit up. Because you can win today, get away with it. You can win tomorrow. But the next time you do the same thing, you can get hit talaga. That's why it has to be a rule-based, in our case, for COL long-term investors, it has to be a cost averaging 10-20% of whatever you have. In our case, as an active trader, you need to know the rules of the game. It has to be based on rule. May systematic of managing it to prevent you from making those kind of mistakes, right? Because one mistake alone, ubus ka na eh. Di ba? Kasi kung aggressive ka, one mistake, tatama ka. For example, if you say, mas marami ako dito sa US because it's more efficient, di ba? It's a developed market. But you have to remember, there are a lot of challenges also, right? There are a lot of challenges in the US also. So these are things that are, it's hard to say na dito tayo, because for us in the US, we can really time the market because the market is big enough for us to go in. Like in the case of the Philippines, wala, kailangan cost averaging, buying it slowly because of when it's cheap, we just have to continue accumulating it. So I think June has to understand. I mean, 50-50, it's hard to say. But for us, Philippines, we know the companies well. We see the disclosures coming out. And we're at all-time low in terms of PEs, right? I mean, 12, 13 times PE. So I think, but I'm more weighted about the Philippines. Weighted on the Philippines.
All right. Thank you, boss. Next question from Anne. No? Sorry, I'll pick this one first kasi nakita ko parang magandang question. Eh. So from Anne, which sectors do you recommend investing in? So let's say, diba, you're looking to deploy, which one should we prioritize? So April, you want to go ahead?
Yeah. So yeah, first would be defensives like power. And then by the next sector that I like is consumers, because alam naman natin nung first half, the surprise was, of course, these consumer companies, the reopening more than offset the impact of the higher cost brought about by inflation. And of course, historically, diba, the consumer companies have been resilient. So okay naman. So medyo focus na lang tayo sa mga retailers and restaurants rather than the manufacturers. If we were gonna do like a mix, where should we focus? So retailers and restaurants over manufacturers. And then the banks I also like, except that of course in a rising interest rate environment, in a steep rising interest rate environment, mas risky sila. Kasi of course that could lead to more defaults, which isn't good. But if I mean, that said though, the likelihood of yung huge defaults parang hindi naman, and of course the situation here is not the same as the US. But those are the sectors that I like in terms of rank power, then consumers, then banks.
All right. Sir Juanis, would you like to give some sectors?
I think April rounded that up well. I agree.
Maybe yeah, for you na, Sir Juanis, I thought of which one so in general, no? So in a, let's say, a market sell off, which one should traders or investors prioritize in your opinion? No? Those that are stronger than the index, or those that got sold off more than the index?
Okay, I mean, I would say that if as long as there's the headwinds are pretty much the same on across, then I think those index stocks that have been hard pressed, yes, you can take that because the whip back can also be big. Those that went not so down may not climb as high as what you want to be able to get. But when I say that, just make sure that the index stock you're buying is something that's not being plagued by something unusual, right? Or something more than what the market is dealing with. And that's the time that I'll probably be going for issues like that. But technically, you don't want it to be too damaged, right? Because the rally sometimes might be limited and it might take some time before they bottom out. That is usually the problem in heavily extended declines.
All right. Thank you, sir. Boss Edward, do you want to add anything?
May bias ako.
Can you share your bias? Tayo lang, boss. Walang nakikinig.
Sinabi ko nga SM eh.
SM, oo. Yeah, SM is a sector in its own, di ba? Kasi being the biggest company in the Philippines. Isang buong sector na yan.
and we should be start looking to accumulate it, mainly because of di ba? It was not taken out of the FTSE, di ba? So there's always this opportunity being able to purchase at this level, right?
Yeah, and SM also has big exposure in in consumer, obviously.
That's right.
Diba? Yeah. In banking, diba? So parang medyo in line rin with what April saying a while ago.
Yeah.
All right, can we see the next question? I think there's two more questions not before we end kasi yeah, unfortunately overtime na tayo, no? So last two questions. Okay. So my apologies, but I missed to attend on time and only came in on the Q&A portion. My question is that given today's steep downward trend, is the worst over? Can someone say it in summarized form? So again, okay, sige, parang this is a very good way to anyway try to close the session. No? So we brought this up as our title, is the worst over? So is it over, or what are we looking at? So April, you wanna start?
Ako, to be honest, I don't think so. Sorry, pero honestly lang, I don't think it is. But are we at the start? I don't think so. I think, okay, from the perspective of, kasi, okay, my thought process is, the root cause of this all, or the main issue is, what is the Fed doing? 'Di ba? 'Yun naman ang dahilan ng lahat na 'to eh. What is the Fed doing, and is it done? And looks like the answer is it's not yet done. And of course, it's all coming from the US. So is the US market cheap enough? I don't think so either. And as I've said, the earnings haven't been downgraded yet. So you have two issues. The one is the Fed, and then second is the earnings. So yun, I don't think the worst is over yet in that respect. And since we're closing na anyway, so that said, should I panic? Kasi hindi it looks like it's not yet over. Ang gusto ko lang sabihin is, you know, um, just remember that although the Fed talk tough, I want to say first is that, um, the Fed has historically turned around, as in really quickly. So I won't be surprised because of all the bad numbers coming out of the US, baka magbago ang isip. So wag yung mga sinasabi nila hindi siya gospel truth. So that said, like, I can't be too pessimistic to think na wala nang pag-asa. And yun na nga, well, when we see bond rates going up the way they are, and the um, dollar climbing the way it is and the peso depreciating, well, maybe a temporary, we might see a temporary bottom. So yun. And for Philippines, valuations are cheap anyway, so that's why I'm a little bit more optimistic on the Philippines.
All right, all right. Thank you, April. Sir Juanis?
Yeah, is the worst over? No. Could there be a temporary bottom? Maybe soon, yes. But after that, the market may have to retest and come down, so you're still going to feel some pain. So my answer is no. We still have to go through a bottoming process.
All right. All right. Short and simple. Boss Edward, what's your take on this one?
I think if we look at our markets, we have been in what we call the weak bear for the last two. After the sell-off in 2020, the huge capitulation, the Philippines is still trying to get out of this pandemic, right? So that's why the reasons why our valuations is really cheap. So if the worst is over, with high interest rates, the answer is no. But do we have to be optimistic? The answer is yes, because valuations are all-time low, right? I mean, murang-mura talaga. And we're seeing huge discount already, And so that's one of the reasons why we need to, this is indirectly what we call the quadrant one, which is a weak bear coming out of the strong bear that we've seen. So this strategy is really just an accumulation, transitioning. So once interest rates goes down, the transition from state quadrant one to quadrant two, which is basically the beginning of the bull market, is really dependent on the interest rates. So if we think that global interest rates has peaked and it starts rolling over, then if you don't accumulate at this stage, right? I mean, hahabulin mo pa yung presyo. It doesn't make sense also. So I think this is an accumulation stage. We're in an accumulation stage. Take advantage of all these temporary sell-off that we're seeing today and accumulate the good companies. No need to be in a rush because it's better late than never. So you just continue to accumulate lang. But you have to be prepared because once the interest, like what Pepper is saying, the Fed can change their mind and start being aggressively, being dovish, and automatically the market will just go up na. Tapos maghahabol ka sa mahal. I mean, you don't want to do that also, right? So I think it's an opportunity. It's a stage of accumulation. Q1 is a stage of accumulation. You're buying at huge discount because of the high interest rate that we're seeing today globally, not in the Philippines. The Philippines walang choice eh. Kasi kung hindi tayo nag-increase ng credit, the peso will continue to devalue. Right? So I think the worst might be over for now because of what's happening. High interest rate is still there. But for the Philippines, I think you should look at it from a much further down the road that this is a chance to be able to accumulate good companies at the discount right now.
Yeah, so I think all three answers are mostly in line, no? So parang yes, we are bullish over the long term, but maybe in the short term there are still some uncertainties and risk, and we always try to manage those risks, right? So wala munang mag-all in bukas, di ba? After attending this session. All right, so so unfortunately we're way over time. So I'd like to ask for like one final advice from each of you guys on what advice that you can give our clients. So April, I'll start with you again.
Yeah, so yun nga, well, continue with your peso cost averaging, and have a long-term perspective, manage your risk by buying for the long term because we're seeing values that we haven't seen, and I'm still bullish over the long term.
Okay, thank you, April. Sir Juanis?
Yeah, so I guess in my sense, since I feel that the worst is not over, you just manage your size of your position so that you are not emotionally affected by what you're going to be seeing. Rallies from here could have some size and you can participate it, but the end of the rally, you're supposed to lighten your position down because I think it'll probably come down as headwinds continue to abound and keep downtrends in place. So be defensive for now. There will be time for you to do the accumulation, as Boss Edward pointed out. Maybe now what you do is start choosing the companies that you feel you're going to start doing that. So do all your planning now while the process is there, and learn how to be able to plan out what you plan to buy so that when you see the really nice prices already, it's just a matter of you just saying, okay, let me buy a little now, let me buy a little now, and let me buy a little now. Don't be planning when prices are just screaming down like that because you're not going to be able to think straight.
All right, very clear as well. Thank you, sir. Boss Edward?
Well, after being in the market for the last 40, 50 years, I have learned to take advantage of crisis because crisis create opportunities. And you need to remain an optimist because like I said, in so many of my events, I have never seen a rich pessimist. All right? So manage your risk, continue to accumulate good companies at the major discount, like what we're seeing today, and cost average it, and over time, you'll be fine.
All right, all very wonderful advice, no? So parang medyo na pressure ako for my final word, no? So thank you, boss. Thank you, of course, again, Miss April, Sir Juanis, no, Boss Edward, no, for that, no. So, thank you for spending the time today on a very short notice. And thank you for the audience as well. We reached 700 plus participants today, right? So thank you again, everyone. So if I may just tie everything up, no. So just to put a bow, yeah. I think it's very important for our audience, no, to again understand who you are as a trader or investor, no, what you really want to do, because there are some different things that our speakers mentioned today, diba? Whether you're an active really a trader, an active investor, or a passive investor. No? So first, identify who you are, and what you would get from that is your own plan. No? You have to have your own plan in this market environment because, as Sir Juanis mentioned a while ago, you're seeing prices decline. If you're seeing prices decline day in day out, the tendency is for us to be emotional rather than be logical. So that's very dangerous in investing, right? So have a plan. Ideally, make the plan when the markets are closed, right? So that we're as objective as we can be, right? So have a plan, and try to execute that plan, diba? Whatever it may be. If you're a trader, as Sir Juan is mentioned, be very careful of your position sizing, diba? Choosing the quality names as well, right? And then as a long-term investor, the plan could be, doing the EIP, diba? Investing slowly, accumulate slowly, no? So again, and the overall goal of having this plan is again to manage our risk. That's the most important thing, right? Risk is all, sometimes kasi people parang cliche, di ba? We always talk about risk, but that's really the difficult part in the stock market, no? I often say that, sell off is both good and bad, di ba? Market sell off is both good and bad. It's bad because baka mapabenta ka, mapasuka ka sa ilalim, di ba? If you weren't able to manage your risk. But good in the sense that it's also an opportunity for us, diba? If we follow the rules, if you know how to, if we understand the markets, diba? We follow the rules. That's also an opportunity for us to make a good returns, diba? So yeah, so we just have to be extra careful in managing our risk, diba? Don't take on more than you can chew, because the tendency there is baka dun pa tayo mapabenta sa ilalim. All right, so yun. So identify who you are, have a plan, and always manage your risks. Right. Right. So that's it for today's fireside. So I hope you were able to get something from the webinar, and see you all again next time. Thank you.